please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The pressure is picking up on the Chinese market, so now down close to about 3% odd. Even the yuan has devalued significantly. So there you go. Chinese markets now down close to about 3.1%. The rest of the region too sulking in trade, cuts of close to about 2% odd, and that's dragging our markets down. So now approaching a near 1% fall on the benchmark indices. Let's invite our experts Ashwani Gujral and Prakash Kaba on the show now. Ashwani, in the morning as well, if you had gone, short on the benchmark indices, we would be making some profits. What should we do at this stage?
See, I would think that there is a much bigger fall in the second half of the day. This market wants to break out of the range that it was in for so many days, particularly on the Bank Nifty. So I would think Bank Nifty, even now you can go short, and we are playing heavier than normal because the kind of tailwind we can see, it does not appear like there'll be any shining knights which will be which will be able to provide support to the market. This market is now expanding, and an expanding market tends to give you much more profits than a contracting market. So that should be clear. As long as HDFC Bank and all the large stocks are coming off, the market is likely to get to a lower range. Having said that, individual stocks, Hindalco is a sell with a stop of 225, target of 210. Reliance Infra is a sell with a stop of 383, target of 365. And DB's Lab is a buy with a stop of 1045, target of 1080. Today's key stock is HDFC Bank. For many days it went up while other stocks went down. Now it's beginning to get into some sort of a correction, and that could have a large impact on the Bank Nifty. So I wouldn't be surprised if Bank Nifty has further to go and underperforms the Nifty in the days to come.
Okay, all right. But HDFC Bank is a shorting opportunity?
I would think so, because it's made a kind of a double top and has reversed. So the stops are close by. Anything can give back, 2, 3, 5%. But 5% on HDFC Bank will have a fairly strong impact on Bank Nifty. So maybe say closer to 1800, 1780, those sort of levels should be looked at.
Oh, interesting. All right, Ashwani, thanks so much for that. Well, remember HDFC Bank, even in Friday's trading session, when the Nifty was having a rah-rah rally, this one in fact ended in the red. And even in terms of the Nifty Bank, we ended with a gain of around 40 points on Friday. Well, remember HDFC Bank was down and was dragging the index by close to around 100 points odd. But the European markets have opened up, and I don't think very good news is coming in from there as well. So let's pull up the European markets. The futures, remember, they were indicating a start on the back foot. So a start in the red is what we were bracing ourselves for. Let's get those indices up for you. Initial rates coming in there. The CAC has opened up with the cut-off around 1%. The FTSE as well is down nearly around 0.7%. So no great cues coming in. Remember, Asian markets as is were struggling, and European markets as well. No good news coming in from those markets.
On the subject of HDFC Bank, I was reading that just 5 Nifty stocks, Infi, TCS, HDFC Bank, HDFC Limited and Kotak Mahindra Bank. These 5 stocks have accounted for 2/3 of the gross Nifty up move since the start of the year. And on the back, because these stocks pretty much got re-rated. Right. And that article went on to say that, your markets cannot hold up indefinitely when only select stocks are contributing, significantly to the up move. So 2/3 of the market up move is on account of these 5 stocks, 2 in the IT pack and 3 financials, HDFC Bank, HDFC Limited, as well as Kotak Mahindra Bank, and they cannot hold up the market forever in the face of weak external cues.
Rima, I'll just give you a few details. In fact, the markets are up 180 points in this in the first half of the year. And if you put those stocks that you were talking about, the HDFC twins, the TCS, Infosys of the world, if you put them together, you'll see that in fact, TCS single-handedly pulled Nifty up by 120 points. Okay. You have HDFC and HDFC banks together, they pulled up Nifty by 210 points. So if not for these stocks, the 180 points would not be there. We would be down nearly around 200 points if you remove the top 5 contributors. Similarly, you have stocks like Tata Motors or Vedanta, they drag the index. Put them together around 4-5 stocks, they pull the index down by around 300 points. But the bigger point is that these stocks that did well, TCS, HDFC Twins, you have Infosys in there, as well as Kotak Mahindra Bank. All of them scored a century single-handedly in the first half of this year, and still we ended up with gains of only around 180 points. So now with HDFC Bank seeing some selling, well, in fact, it's not good news for the bulls at all. But Prakash is with us as well in the studio. Prakash, your view on the index from here and individual stocks as well. How do you trade them?
I think so far looks like Nifty and Bank Nifty both are down. Nifty can see a slide to maybe around 10,560, 570 zones. Good possibility it can do that. And Bank Nifty also is down. Can see even lower than 26,100. But 26,100 I would assume is some kind of a support, but looks like it's still down. No sign of strength is yet on Bank Nifty as well. I like two stocks, both on the shorting side. One is Just Dial. Looks down and can see a slide to levels closer to 500 zones, stop above 550. And Reliance Capital is breaking apart. Looks like it's heading down to levels closer to 360 zones, stop above 375.
Okay. Prakash and Ashwani, thank you very much for that. Large deal taking place on ICICI Bank, 0.4% equity has changed hands. Get into a break. When we come back, full tilt in the auto sector. Auto sales numbers for the month of June have come in quite strong. Ashwin Patil of LKP Securities joins in on the other side to decode those numbers.
HDFC Bank moves lower. Actually, we are talking about the stock seeing some selling pressure. Pull up the intraday chart. That stock has moved lower as we speak. We have Yes Bank as well that's seeing some selling pressure. HDFC Bank, just take a look at that. We rarely see that stock, move down so sharply. The last couple of days, that's really been the case. The Nifty is down now 102 points. The bulls will do well if they can defend the 10,600 mark on a closing basis. For the time being, that looks like a bit of a tough ask because you have the Shanghai market that's down 3%. The European markets have opened up with cuts of around 1%. And our own markets now, the breadth of the broader markets as well is getting worse. More number of stocks declining in comparison to the number of stocks that are advancing. Now we're nearly in the ratio of one stock that's advancing for every 3 stocks that are declining as well. So not a great looking screen. The crisscross lines actually should come up for you. They're drifting away as we speak. But auto sales for the month of June, they've risen and they've come in pretty strong actually. Ashwin Patil of LKP Security joins us on the show for his view on it. Hi Ashwin, thanks so much for joining in. Well, if you could tell us your take on Bajaj Auto. Those numbers look quite good. The stock is still holding in the green. Are you positive on the counter going ahead? Do you like what you see?
Yes, among the two-wheeler pack, Bajaj Auto remains our favorite pick. If you see the trend in the sales that we have seen over the past few months in Bajaj Auto, we have seen that with the pickup in the export market and especially Nigeria, the exports have actually shown very good growth, about 30-odd%. And in the domestic markets also, we can say that the new launches that the company has done, the Avengers and the V family is doing good. The couple of Avenger launches that the company has done are doing good. CT100 and Platina, as well as the recovery that we have seen in Discovery sales. Overall, it's panning up really very well for Bajaj Auto. And if you see the three-wheeler sales also, because of the permits getting opened, the continuation of permits being opened in Maharashtra and various other states, that has actually led to a strong performance from the three-wheeler pack as well. So overall, depending on the sales performance as well as the Q1 expectations of good Q1 numbers, we are quite optimistic on the stock.
Okay. What about Eicher Motors? Because Royal Enfield sales growth has been a bit disappointing. It's, tracking a run rate of 75,000 units, lower than what the street was anticipating. Many people were close to 80,000 units per month. And given the stock has run up so much, its valuations are rich. Where do you stand on Eicher Motors?
Eicher Motors has seen a great run-up over the past 1 year or more than that, and the stock right now, I think on the higher base of last year, the sales numbers are not coming that great. The growth rate is actually subdued at this point in time. So I think with the launches that had happened over the last 1 year, we have seen the results in the sales that come. But right now, with the valuations a bit stretched, we are still positive in it, but the upside now reduces up to some extent.
Okay, what do you make of Tata Motors as well as Mahindra and Mahindra? Yes, the domestic business of Tata Motors is just a small part of their business, but stock is languishing at a 52-week low. What's the outlook there? And what did you make of Mahindra sales numbers? CV and PV sales both look good.
Well, we would say that Tata Motors, the domestic numbers, the domestic business is not an issue at this point in time. We have seen great sales coming up from both the CV as well as the PV businesses. On the PV side, we have seen great launches like the Nexon and the Tigor, etc. And on the commercial vehicle side, we know that the commercial vehicle cycle is on an up move. Good rains are expected. Agri produce is expected to be good, and that would definitely keep the momentum on. But the main concern for Tata Motors is JLR, which is actually leading to this kind of drop in the market price. And we know that there are certain issues which are troubling the company on the JLR front, like the macro front. On the macro front, various geographies like UK, US, etc. are troubling them. And the huge investment guidance that the company has given recently is heading towards coming off negative free cash flow, and that is one of the main concerns for Tata Motors. But I think at this level, the company is at all-time low, and it's a good time to buy, because we think that there will be a recovery in the sales with the new launches that they are happening in various geographies. And also the hedge book, which is unwinding at this point in time, though the GBP is depreciating. Maybe in two or three quarters we may start seeing the results on the profitability front on the positive side. And talking about M&M, the company is in a sweet spot considering the new launches that they'll be coming up on the UV side. The UV business, we know that the company has been losing market share at a great rate over the past 1.5 years. Because there has been no great launch, and the success of the launches which were launched, which had happened over the past 1.5 years, they were actually, that was limited. And considering the FES segment also, the company is doing well on the farm equipment business as well. In the first quarter, M&M is very well placed on that front as well. So I think we would like to remain positive on the stock.
Okay. Thank you very much, Ashwin, for that. Global jitters continue to take our markets lower. The Dow Futures is down close to about 200 points. In Europe, has opened with a cut of close to about 1 up to 1.5%. Get into a break then. On the other side, we'll get you highlights of the first ever media interview with Bank of Baroda Chairman Ravi Venkatesan on the main problems that PSU banks face. Stay tuned. Welcome back. Trade jitters across the globe are hurting our markets. So now down close to about 1%, extending the slide. We had a gap down opening, but things have only deteriorated through the course of the trading session. The cuts are getting deeper, even for the regional markets. So in Asia, as you can see, now down close to about 2.5%. Europe is open with a cut in excess of 1%, and the Dow Futures is down close to about 200 odd points. For our own markets, we've resumed weakness after a day's pause, and now we're trading below that 50-day moving average at the day's low. Except IT, all the sectors are trading lower, with metals, infra and energy being the worst performers. IT continues to be the outperforming sector. It's rallied nearly 15% in the last 3 months, outperforming the Nifty Sensex by close to about 3 odd %. But let's get you a big CNBC TV18 exclusive. In his first ever media interview, Ravi Venkatesan, the non-executive chairman of Bank of Baroda, highlights the main problems that PSU banks face and provides possible solutions to them. Listen in.
I think the first thing is to fix governance, because if you can't fix governance, you really are pouring money down that leaky pipe.
And for fixing governance, you need to reduce government stake, you think?
I'll come to that. So the first job is you have to empower the boards. The board has to have the ability to appoint others with the right expertise. It has to have the power to appoint the CEO, the executive directors, shape strategy, give them their targets, hold them accountable. This is just the most foundational aspect of governance, and we don't yet have that.
Compared to you as a chairman of the Infosys board and of the, say, Cummins board, if you compare your position here, you think that you're not empowered enough
here? It's not just me as a non-executive chairman. The board itself is not empowered to do these things, and I think that is just foundational. Okay. I think the second one is to address the talent issue, because I think you can have all the strategies and ambition and the opportunity. If you don't have the right people in the right roles, you're not going to get very far. And here what we have, as I said, other than State Bank, you do not have a systematic ability to attract the best or a competent person for the role of the MD, EDs, etc., and give them enough tenure. You don't have the ability to recruit out from outside laterally, even into specialist positions like technology or risk, etc.
You can't appoint them?
No, there is great difficulty in the system. So now we are working with the government as a group of public sector bank chairmen to try and get a framework that would allow this. So these, I think, are just the two most fundamental improvements without which I cannot see progress being made. If there's a third one, it would be to eliminate fear in the system. Again, the Nayak...
That's a newfound fear.
It is not a newfound fear. It was addressed in the Nayak committee report in several pages. I actually, before I took this and had the courage to take it, I read the report and actually met Mr. Nayak. And there are several pages on the fear of CBI's,
yes, the 4 Cs, yes.
Yeah, CVC and all that. I think the recent events have conspired to amplify that fear by at least 2 orders of magnitude. And it's not just management which is now scared, even non-executive directors are getting pretty apprehensive. Now, this fear, it's really paradoxical. On one hand, all this system of accountability doesn't seem to slow down frauds and bad lending decisions. And on the other hand, it creates paralysis. So I think this is incredibly dangerous and debilitating.
Welcome back, and it's not just the equity markets which is trading in the red. Most of the commodities are doing exactly the same. If you look at the crude oil prices, we are trading nearly a percentage point on the lower side. There are expectations that you might see an increase in supplies, especially after US is talking to Saudi Arabia to increase production. That is because Saudi Arabia still has 2 million barrels per day of a spare capacity, and they actually could jack up more supplies. That is where this move really is coming in from. Also, Iran says that the sanction from US might be on the state-run oil companies, but the private Iran companies could still continue to export, so the supplies wouldn't be hampered so much. And we are looking at that reaction on the prices on your screens. In any case, it has been nearly a 6% of gains in the previous week, and there is some profit-taking finally coming in for this one. Expected to be short-lived, though. Should also get the silver prices on your screens, because there is a very sharp correction coming in for that. Remember, the metal prices all are trading in the red, and that is silver for you. The Indian price is 0.5% down, and the global prices have broken below $16 per ounce as well in Asia. This has been a very strong support for the longest time, but we really seem to be giving away floor onto that. So both gold and silver making fresh 2018 lows on your screens. Aurobindo Gayan now joins us to talk strategies there. Aurobindo, let's start with precious metals. Further declines coming in. The dollar is strengthened. The physical buying is absent. How much more on the downside before we actually see some buying coming in?
Well, yes, I think both the gold, silver, as you said, is coming down, and the silver precisely has declined below $16. So I think that is very important to look at it. And I think the bearish view could be prolonged maybe in next couple of trading sessions, and we should see Indian market going short at a higher level. And since we are now already down by 250 rupees at the Indian market, so going short on a pullback maybe towards 39,800 levels would be a good level to go short for a target of 39,300, 400, the stop loss of 40,000 above. So basically, industrial metal are down, so it is having a strong impact on silver as well. So we should continue to hold short view on silver in the near term.
Since you spoke about the metals, and it's really turning out to be a negative year for the base metal prices, almost everything in the minus, even at these levels, even with most of them trading at multi-month lows, do you see some more pressure? Are there still more shots that can be created here?
Yes, I think now I think nickel seems to be getting into a negative zone, and it is about to break 1,000 rupees here in Indian market, and it's comfortably trading below $15,000 here. And there are some fundamentals turning into negative for nickel as well. So I think we should see more sell-off in nickel as well as copper in the short run. So my call is to go short around 1,010, 1,015 for the July contract. We should see a positional target of around 970 as well, with stop loss of 1,025. Besides that, copper is also looking weak since it has broken $6,600 and now close to 6,500, and the key support is broken down. So I think we are looking at another 2-3% of decline in a couple of sessions from here.
Okay, all right. Thanks so much for that, Manisha, as well as Aurobinda. Just keep an eye out on the markets, though. We're talking about the commodity markets. Take a look at the equity markets. We're moving towards the 10,600 odd mark. And it's not just metal stocks that are selling off. You have stocks like Bharti Airtel, Adani Ports, Sun Pharma as well. If you pull up the intraday chart of Sun Pharma, you'll see that that as well has moved to the low point of the day. So it's not a pretty looking screen. A lot of selling pressure, selling actually across the board. And now we've given up almost everything that we put on in Friday's trading session. On that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next.